Hi, this is Adam McClure with Portia+Rohm Realty, and I want to talk to you today about investments and a little bit of the things that are going on in the market right now. We do a lot of work with investors, and I enjoy it. It's a lot of fun because I'm an investor myself, and there's pretty much three ways that most people are out there doing investments right now. So I want to cover all three of them, and just in the general context of what's been going on in the market since 2008 when everything melted down. So a lot of opportunity out there, a lot of interesting things going on. So the first thing obviously is there's a lot of people that are saying, cash flow is where it's at. I want to get a stable, steady return, and I'm going to buy something, I'm going to fix it up, and I'm going to hold it, right? So I'm looking for cash-on-cash returns. I'm looking for stable tenants, etc. And basically, what you're trading off there is you're trading a little bit of your time, maybe more, maybe less, for a reasonable rate of return and not a whole lot of unforeseeable or unusual risks. Your major risk if you've got rental properties are your tenants, obviously, because they can trash the place, or they can move out, and then maybe you've got vacancy for a while, and so that affects your overall returns and the performance that you're trying to achieve. The other thing that can happen, obviously, are things like natural disasters. God forbid an earthquake. We are in the San Francisco Bay Area, but with all that said, a lot of people feel really comfortable saying, "I own a piece of the rock. This is my piece of the world, and I'm comfortable dealing with things that I know, and I'm okay with maintenance and so on." And it's a reasonable return. Typically, you're going to get between, if you invest well in neighborhoods where the cash flow is good and there's not too many problems, and you screen well and you find the right tenants, you're looking at an average return of about 7 to maybe 10%. And that can be pretty significant compared to, I think, as of the time of this video, Ally Bank is offering what, 1.25, 1.5. I think ING Direct is 2, maybe 3% maximum. I think that's the highest I've ever heard of anybody for a savings account. And that's probably your lowest risk investment right now. So 7 to 10% looks pretty good. And I would say over the long term it's actually very good. And that rate of return can continue to improve potentially with increases in rents and so on, and tends to keep pace with inflation. So first type of investor, as you think about what kind of investor you are, is you might be somebody who just says, "Hey, I'm buy and hold. I'm going to rent it out, and I'm going to hang on to it." You have a modest time investment, and you get a reasonable return without a whole lot of external risks. Now that's pretty interesting. But type 2 is if you want much faster return on your money, which everyone says, "Sure, I do," but you have to take a lot of additional risks to get it, and that is the fix and flip, right? You're going to buy it, you're going to fix it up, and you're going to sell it for a profit. That's what we all want to do. The things that are going to get in the way between here and there are usually, once you start opening up the walls or you start doing a major project, you're going to find out very quickly that there's a heck of a lot more stuff that needs to be done, especially with permits, and in most markets where there's pretty good gap between what you buy it for and what you potentially could sell it for. Most of your buyers are going to be FHA, first-time home buyers, and FHA is going to add in additional restrictions and requirements in order to get the loan through and to make it possible to close that deal. So when you start looking at what all is involved, there's definitely risks of cost overruns. In fact, I'd say that's the most common situation that trips up investors. Running teams is one of the ways that you're trying to control that risk, and how you work as a general contractor or even the general contractor you're working with. So you have some ability to manage those risks, but the major thing that you're trading off is your time. The amount of time that it takes to run these projects and do them successfully. First of all, I would argue that it takes 3 to 5 years of just being in the trenches and doing this type of a job before you get good at it. And the second thing is that even if you're a pro, it's a full-time job. It's pretty much impossible, in my opinion, to be able to be a fix and flip investor and to have another job on the side, any kind of a job. So if you currently have a full-time occupation, or frankly you're not willing to commit to full-time being involved with these projects, then it's probably not the right thing for you. However, for those who are dedicated and willing to go that route, you can get very good returns. And to be perfectly honest, they can be anywhere from negative 40% on your capital to 120% on your capital in a single deal. So you can imagine that there's a fair amount of additional risk that you're going to take on when you see that kind of a swing and you see that kind of variance. And these are real, true-to-life numbers from my own experience. We've had some projects that did exceptionally well, and every now and then we have some that are not what we anticipated or intended. And so, we exit and gracefully and move on to the next one. So being willing to go through the full cycle and really dedicate yourself to becoming better and better at it so that you maximize the opportunity in every deal, it's a huge time commitment. So the returns look great, but if you're not ready to make that your full-time career, then it's really difficult to be consistently successful at it. And I think that we've built a pretty substantial track record that's become pretty consistent, and I'm happy to talk to you about those details. So those are two types of investors. You buy and hold it for residual income as a rental. You fix and flip it for a fast return, but there's the huge investment of time that goes with that. And then there's a third kind of investment, which is, I think a lot of people know about it, but a lot of people don't know how to get involved with it. And that is to actually participate in a fund. So, for example, lending your money out with a certain rate of return, or participating in a private fund, so that you're looking at a better than average rate of return, definitely superior to putting your money in the bank. And in many cases, it can be even superior to owning your own rentals. But the time commitment is practically zero because you're giving that money to somebody else to run it. The main risk in that type of scenario is that you need to really qualify the person you're working with who's managing the fund. Understand what they bring to the table, understand what their experience is, and basically get to a high level of comfort in saying, okay, here's a chunk of money. And obviously you get to choose. Am I going to give them a lot of money, or am I going to give them a little bit of money, right? And so you might step your way into it slowly if the fund allows that kind of contribution. So we do run a fund with at Portia+Rohm, and that's an avenue that I think more and more of the investors who we've worked with, who've taken direct roles either as a rental property manager, maybe they've sent that out to an outsourced firm, but even still they're looking at saying, you know what, it would be better to get good returns without the headaches. They're still spending a lot of time managing issues that they can avoid simply by being a lender. So these are three different ways of investing, and I encourage you to think carefully about what's your not only your risk tolerance and your desire for returns, and what's the type of return that excites and attracts you, but just also generally where you want to put your time and what the value of that is. And maybe you want to kind of have a mix of things going on, and that's fine. But I think it's very important just to know who you are, know what you want to achieve, know your objectives, and then to invest accordingly and to work with a firm that's going to help you achieve those objectives. So this is what we do with our investors. We give you access to all three of these avenues, and we're happy to give you more details. And in fact, I'll be providing some additional videos where you can see some of the properties that we've gotten engaged in a fix and flip, as well as some testimonials from investors that we've worked with. So I really appreciate you spending the time to sit with us and watch this today, and thanks for your questions and comments.